All right, we're about to pull back the curtain on one of the biggest stories out there right now, all those climate promises from big corporations. But what if the story we're all being told is just that, a story?
I mean, this quote right here, it gets straight to the point. It suggests that behind all the shiny, happy marketing about sustainability, there's a totally different reality, one that's built more on perception than on actual progress.
And just look at the scale we're talking about. $500 billion. This isn't just a small discrepancy, you know? Sources are calling this one of the biggest greenwashing scams in history. The stakes really couldn't be any higher.
Okay, so let's dive into our first section, the carbon neutrality illusion. We're going to explore what some sources are calling vibe-coded accounting, which is a great term, by the way. It's basically a system that feels good, but when you look at the numbers, they just don't add up to real change in the real world.
This is the big question, isn't it? The one we have to figure out. It feels like a total paradox. A company's pollution is actually going up, but their official carbon footprint, the one they show you and me, is going down. How on earth is that even possible?
Well, here's the short answer. It all comes down to this murky, often unregulated market for something called carbon credits. Now, in theory, these credits are supposed to offset emissions, but what investigations are suggesting is that a lot of them, well, they're basically fake. They're just accounting tricks that let companies move pollution from one spreadsheet to another, while it never actually disappears from our atmosphere.
So, how does this actually play out? To really get it, we need to do what they always say, follow the money. Let's look at the anatomy of this so-called green heist.
This comparison to the 1MDB scandal is so important. It paints a picture of huge amounts of money that was supposed to go to green projects, allegedly just vanishing, siphoned off into these complex webs of shell companies before a single tree ever gets planted.
So, you want to see how the magic trick works? It's almost shockingly simple. First, a company pollutes. Then, they buy some really cheap, really questionable carbon offsets. A bunch of confusing paperwork gets shuffled around to create this veneer of legitimacy. And boom, just like that, the company gets to stamp carbon neutral all over its products.
And this perfectly captures the deception, right? It's like they're keeping two different sets of books. The public one is full of these amazing stories about visionary green investments. But the private one, the one that shows what's really going on, is allegedly all about hiding the true environmental cost to their business.
Which leads us to a really critical question. Who is actually profiting from all this? The motive, according to sources, is a word you might have felt in your own wallet lately.
Greedflation. You've probably heard it. It's when companies use something, like, say, the shift to sustainability, as an excuse to raise prices. But they don't just raise them to cover the new costs. They raise them to cover the costs and then add a little extra to pad their profits. So you think you're paying more for a greener product, but that extra cash might not be going where you think it is.
And the amount of these excess profits is just mind-boggling. One estimate puts it at $100 billion in some markets alone. And here's the thing to remember. Consumers are paying this extra money because they want to help the planet, but it's allegedly just ending up as pure corporate profit. This quote really gets to the root of the problem. When the number one and really the only goal is to maximize shareholder value, a company eventually just runs out of good ideas. And at that point, the easiest way to keep growing is to squeeze more out of your customers and dump your costs onto the environment.
So, how do you distract everyone from this? Well, our next section looks at a very 21st century smokescreen, all the hype around AI and other high-tech fixes.
Yeah, just look at the gap between what's promised and what's real. We're constantly told that AI is going to solve climate change, but the data shows that current AI tech fails at professional tasks a whopping 96% of the time. And yet billions and billions of dollars are just pouring into it.
And when you pour that much money into something, you get what the source calls sunk cost traps. Companies have invested so much that they can't possibly back out now, even when the results aren't there. It creates things like ghost data centers and other projects that just chew up resources without actually delivering the solutions they promised.
So, let's tie all of this together in our final section and ask the really big question. What's the final verdict on this whole system?
So here it is, the anatomy of the illusion we've just unpacked. It starts with a $500 billion greenwashing claim. It's carried out through a financial shell game with fake credits. The whole thing is fueled by greedflation to boost shareholder value. And it's all hidden behind the hype of unproven technology. And the result?
A very short-lived illusion of making progress.
Ultimately, this is the core warning. There is a huge, dangerous gap between the promise of a green revolution and the reality of a financial system that seems to be fundamentally unstable and, frankly, just wide open for fraud.
And that leaves us with this final, crucial question. Is all this stuff, the greenwashing, the shell games, are these just the inevitable growing pains of building a new green economy? Or are we looking at a systemic risk, a flaw so deep in the foundation that it threatens to tear down the whole effort and maybe even bankrupt our future? That's the thought we're going to leave you with.